India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. And I was just thinking, I'm not really sure what day it is. This Tuesday, right? Or
Tuesday, yes.
Is it Wednesday? Tuesday.
It's Tuesday,
Tuesday
yeah.
it is.
We wish it was Wednesday, but it's Tuesday. And I guess the Bulls are also reeling under pressure, and they're probably losing count of the days as well, because the down days are far too many compared to the up days, and we had one of those yesterday as well.
Well, and I think it's been close to 3 weeks since three of us have anchored together. So let's hope we can bring some good cheer in the first week.
And let's hope all three of us are here in terms of, the set continues in that sense.
Back again.
Absolutely. Let's quickly run you through the cues as they stand right now as we begin this morning. US equities last night better and, higher. Nasdaq, of course, was the leader index there, 1.25% gain. But I want to make that point specifically because not that the entire market was up. Only 4 out of the 11 S&P sectors were higher. And you had about 54% of the S&P 500 constituents, 54% of the S&P stocks, which were actually down. The S&P 500 itself was higher, about 0.5% or so. But it was more mixed in terms of the overall underlying market breadth, etc. As I said, Nasdaq led the gains, and there the AI sort of super stocks, of course, were the ones which did the best. 3% gains on NVIDIA. This is ahead of the CEO, Jensen Huang, who's set to deliver the keynote at the biggest sort of, tech AI event, the CES. And we'll hear from other industry leaders out of there as well. In terms of the progression for AI, investment going into AI, remember Christopher Wood making the point early this year, actually it was, I think, late last year, saying that one of the big risks is that investment into AI, which has been such a growth engine in the US, starts to taper off sometime during 2025. So we'll see. Dollar index, and here, of course, there was a fair bit of flip-flop, down 0.6%, 108.31 is where we left off. This index last evening, India time was down about 1%, and then it recovered and ended about zero. I mean, it finally left off around NY close at down about 0.6%. So what happened is there was a Washington Post article which basically suggested that the tariffs which Mr. Trump, the incoming president, is going to impose are going to be on specific imports. It's not going to be wide-ranging across the board. Very soon after, and within the hour, we had Trump himself posting on the social media platform Truth Social, essentially pushing back against this Washington Post article in his typical style, saying, well, the article was sourced. He said these sources are all fake, and he said, well, tariffs are all really going to be out there, and there's no dilution, no watering down. And that's the reason why you have the dollar, which actually recovered a little bit from being down 1%. Came up almost about 0.5% or so from those levels. There was, of course, also the final services PMI for the month of December in the US, which was revised down to 56.8. But this was expected compared to 58.5. On the rate side, nothing very much. 1 basis point change on the 10-year. Oil was down about 0.4. So these are small changes. Now, just to sort of tie in the levels here, yesterday, once again, was a bit perplexing across the board. And people are still scratching their heads and wondering what happened for that 1.6% cut. So it's not showing through in the US. It did not show in this intensity across Asia yesterday. So what was the reason? I mean, if it was the virus, and I think we'll talk more about this as we go on, it should have showed up everywhere. It should have showed up in the US last night, and we would be waking up to it. But that was not the case. Probably the most the explanation which perhaps fits the price action is, of course, fears around growth and, of course, FII selling. The FII selling number is not that large contextually speaking. It's about 2,800, just under 3,000 crores or so yesterday. And compared to the fall, relatively speaking, it seems a little overdone in that sense. Now, but we have to, of course, face the price action and trade the price action. And here, 23,460 is the number on the downside. We left off at about 23,600. 23,460 is the recent low that we saw. And a break below it will confirm further downside levels. Nifty Bank, on the other hand, sort of closed decisively below the daily swing low. Here, it also, by the way, it also broke the November lows briefly, but managed slight close above it. Here, the level to break on the downside is 49,787, and a break of that will confirm further downside levels. And on the upside, for the Nifty Bank, it's the 40-hourly exponential, which is 50,883. So that is those are levels which we need to watch out for as we begin another session. I just want to make one point. If you remember back around September, if you look at India and India's weight in the MSCI index, MSCI Asia ex Japan index, it had, FIs were massively overweight even at the end of September. India's weight is just under 20%, and I think FIs at the end of September were about 17.5% or so, maybe a little more, but under 18%. Since September, I think FIs have sold another $25 billion. So we'll have to get those numbers, but I think the FI positioning now, as far as the market is concerned, should be at least at a decade, if not a decade and a half, kind of a low. So, at some point that will start to reverse because, frankly, just looking at what the historical weight has been and, where we are now, as I said, we'll update those numbers. This does seem a little overdone, but for now, at least on a day-on-day basis, as you track it, it is what it is, and it of course has looked a little shaky over the last couple of sessions. GIFT Nifty indicating about 1/3% higher start. It's about 90 points in the green. Surabhi.
Prashant, yeah, absolutely. You sometimes wonder what's the point of looking at global cues, considering what we're dealing with is just squarely an India problem. It's an India market falling on its own weight with the kind of FPI selling that we've had. But nonetheless, I was looking at these cues, and I was actually looking at the rebuttal that Donald Trump issued to this so-called Washington Post article. And the thing is that even when you read a Donald Trump quote, you can hear him say it out loud, right? So for the benefit of our viewers, I just want to read that, because the market got very excited and hopeful that maybe the actual tariffs won't bite as much as what the rhetoric has been. He's completely denied all that. He says, the story incorrectly states that my tariff policy would be pared back. That is wrong. The Washington Post knows it's wrong. It's just another example of fake news. So that's Donald Trump absolutely quashing any hopes that he will be a little more measured and a little more charitable in his tariff policy. Anyway, let's move on. Speaking of, the U.S., the economy is continuing to roar, especially on the manufacturing side, because we also had the composite PMI numbers come out of the U.S. yesterday, and they too were very, very strong, 55.4. So the expansion continues in December. The other thing is this tech rally that we saw on Wall Street. A lot of it was powered with what Foxconn said earlier in the day. The genesis was the quarterly report from Foxconn, where their revenues were up 15%, record numbers, and that powered tech stocks actually around the world, including, of course, Wall Street. And we saw what happened with NVIDIA and several others over there as well. A lot of technology news to track. Actually, speaking of tech, Mr. Satya Nadella himself is in India, and he's been meeting a lot of the dignitaries, including Prime Minister Modi. And he said, and the quote is up on your screens, that we are excited to build our commitment in making India AI first and work together on our continued expansion in the country to ensure every Indian benefits from this AI platform shift. Why am I, putting this on the table? Just because a lot of the product-specific companies in the listed arena, some of this tends to rub off. And anyway, we're moving into the IT earnings season as well, and IT is going to be a focus area for sure. On to Asia, markets are very mixed. The Japanese market has recovered from yesterday's deep slide. Japan's actually rallying very nicely this morning, 2.5% higher. But the Chinese markets are lower, and there's constant sort of geopolitical / tariff issues that are coming to the surface. The headline this morning is in the form of Tencent. Tencent shares are down, and why? Because the US has designated Tencent as a Chinese military company. So some of these skirmishes and issues between the US and China, they're daily headlines, and the markets are reacting to it. Coming to our session, so what did the Nifty do? It was an effortless slide below the 200 DMA, and that was the issue yesterday, the worry yesterday, that the bulls didn't even put up a fight. It was just a one-way decline. So that level has come and gone, and now we're tracking, of course, last week's low, which is around the zone of 23,460. So let's see if the bulls will have some respite, and if the bounces stop getting sold into. That is what was happening on Monday. Now to the numbers, like Prashant also pointed out, the FII selling number is not as bad as what we saw on Friday, but it's still selling off about 2,500 crores. But the bigger issue is, look at the domestic buying. The DII buying was almost to the effect of 5,750 crores. Despite that, the market fell so sharply. So we know that the panic or the issues now have spread to the retail side of the market as well. And that's showing up in the way the mid-caps are cracking. So these are some of the internals that we need to keep in mind. In terms of stock action, I'll just watch out for some of the PSU names from the oil and gas space, because BPCL has in fact confirmed that yes, it's looking at the IPO of Maharashtra Natural Gas, which is a city gas distribution company, largely has operations in Pune. And, this is a joint venture. It involves companies like GAIL and IGL as well. So watch for a clutch of these stocks. Could be fairly interesting. Brokerages have started writing their notes on it. We'll tell you more about it as we go forward. But first, we need to deal with the market, Nigel, which has been under relentless pressure.
Well, the institutional number actually was baffling yesterday because you expected a large FI net sell number, which makes you to think that maybe there's a part of the domestic money that was in trouble yesterday. There was some pain that was seen.
Yeah.
And how much more is in the offing? That's the key, with regard to a bounce back that we'll see, because the majority of the pain played out yesterday with that part of retail capitulation that we saw, then we could see a bit of a bounce. Or is it a couple of days more? That's important. But three big observations with regard to yesterday's trading session. Yes, we did fall, but the fall was not on large volumes. And when, the fall is on lower volumes, then the drifts are large on both sides. And yesterday, the drift was on the downside. So that's point number one. Point number two, there was unwinding seen in futures. From the client side, both on index futures as well as on stock futures, and on the FI side, on stock futures itself. So there was unwinding of some long positions that we did see in yesterday's trading session, predominantly on the client side. And finally, the problem is the structure has got punctured, because both the Nifty and the Nifty Bank, both of them ended below the 200 DMA. And that's why you'll see that the structure, at least in the near term, has got punctured because of the kind of close that we saw yesterday. First, the point with regard to volumes. If you compare Monday's volumes with Friday's volumes, you'll see the FI gross participation actually was 14% lower in comparison to what we saw on Friday. Roughly, yesterday, the gross participation was around 22,000 crores odd, and Friday it was around 25,000 crores odd. The total traded volume, the value on the NSE was around 1.05 lakh crore, which is almost similar to what we saw on Friday. Basically, yesterday's fall didn't come on large volumes. Next up, what did the FIs do? Actually, they added some mild long positions in trade, and they covered some shorts in yesterday's trading session. But the point that I was making with regard to the FI positioning, yes, they're net short. 82% of their positions are on the short side. In absolute contract terms, it's around 2.2 lakh contracts odd. Not yet at extreme ends, but we'll require some good news for these shorts to actually go ahead and cover. The reason for the fall yesterday was some unwinding of long positions. So let's get straight to that. If you look at the client side, on stock futures, 10,000 contracts were unwound and some mild short positions were added. So longs getting unwound. Even on the FI side, they as well unwound some long positions on stock futures, and there were some shorts that was added. Don't have to take away from the fact that both of them, clients as well as FIs, on stock futures, overall they're net long. But yesterday, we did see some unwinding of those long positions and some minor shorts getting added out there. And those unwinding of long positions could have weighed on the market. Moving to the levels that we should be tracking. Well, there are two important levels. One is the 200 DMA, because that broke, and that broke decisively yesterday. So you'll get confidence once the Nifty can get past that up. A bounce is due today, and we're going to start off in the green, but you'll want to get past this particular level to feel good and feel that we have a couple of another 100 points odd. And on the downside, the recent low, which was last week, that's the important mark. So we start off in the green, but we need to build on from there, because yesterday it set some panic, particularly among the retail audience. The good news, though, is that yesterday's fall wasn't driven by institutional selling.
Absolutely. So let's see if the worst of this retail capitulation, the individual trading, retail and HNI, whether that is over and done or not. Let's kickstart then the conversation with the equity call of the morning. Vikas Jain of CLSA says the setup for the Indian equity market in 2025 suggests a fizzle more than fireworks, with its extended absolute and relative valuations along with overvalued domestic bonds and currency. He says risks of EPS cuts if near-term growth recovery is delayed, and a strong capital raise pipeline may form headwinds, as foreign flows will hinge on the view on emerging markets after seeing trade restrictions imposed by the new Trump regime, and a clearer view on the efficacy of China's efforts to boost its economy. He says they favor staples, commodities, and mega caps.
All right, well, that's the view coming in. Let's get you one more important view. Ben Powell is Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Ben, good to have you with us here on the program as always. Good morning, Prashant this side. I was just talking about the FII positioning, which now I think should be, if not at a 10, at least at a 10, I think at a 15-year low in India. Just if you look at India's weight in MSCI, sort of FI ownership compared to India's weight in MSCI should be, I think, between 15 and 16%. we'll get the numbers as we go along. But what is your sense? A bit overdone here, and what will trigger a reversal in those flows?
Hi, Prashant. Great to be with you. Yeah, look, we at BlackRock, the world's largest investor, we're still pretty constructive India, but in the short term, I think it's fair to say there are a couple of headwinds. Domestically, concerns about valuation and some mild growth concerns, which are obviously very important. But I think in the bigger picture, there are a couple of major issues beyond the power for anyone in India to control, namely President Trump and China. On the China side, there's still a degree of enthusiasm, I think, an expectation and a hope that Chinese authorities are going to do more, and that can be encouraging for equities. So from an emerging market kind of exposure perspective, China is still a little bit in favor, I think, and perhaps some of that's being funded from India. But for all emerging markets, maybe all global markets, we're all looking at President Trump, I guess, right? So every meeting I go to all over the world, the first question is, President Trump, what do you think? And we are only 2 weeks away from being able to give some more concrete answers to that. So inauguration, January the 20th, and then at that stage, we'll go from all kind of thinking about what he might do to seeing what he actually is going to do. And even if some of that is, let's say, challenging vis-a-vis trade restrictions and so forth, it's well understood that markets much prefer certainty. So even if the news is ostensibly bad, I think the certainty is something that we all need as global investors, particularly in emerging markets. And that would be true here in India as well, I think.
Right. Ben, we were discussing exactly this last afternoon here in India with one of the currency strategists at Barclays. And I think we were in all agreement that as much as markets would like absolute clarity on the 20th of January, that may not entirely happen, right? We need to see how these policies play out and what orders and what announcements come on a daily basis. So while that remains a moving piece, and we'll deal with it as the clarity emerges, what about the more India-specific issues? I mean, how real do you think they are? This whole growth concern, is that really becoming a big sore point now? Because in the middle of 2024, the argument was that China is a tactical trade, while the world awaits a rebound in the economy, whereas India should be a long-term, constructive, sort of positive view. But the money simply hasn't been coming in. The money's just been moving out.
That's true. So how real is the growth kind of scare? I think it's a little bit real. So I think probably the risk to earnings is more to the downside than the upside. So, that's not good, I suppose. So there is a little bit of a genuine negative. But I think, we've all been in markets for a long time. You do have kind of a strange reality whereby price leads sentiment. So what does that mean? It means people tend to be bullish when markets have gone up, and they tend to become more bearish when markets are going down. That's just human nature. It might not be rational. Theoretically, we should buy low and sell high, but it feels so much more natural to kind of do the opposite. So I feel like selling low is where we are. That's likely to persist for a period of time. Selling makes people nervous, and that begets more selling. And it feels like we're not fully through that issue. So for me, we at BlackRock are fully kind of on board with the medium-term bull story for sure. In the short term, there is a growth concern. I don't want to totally dismiss that. It's there. But I think actually it's more of a kind of technical unwind of positioning, which it still seems like has further to go, at least for now.
Good morning, Ben, and good to speak to you as always. This is Nigel on this side. I recall the last time we chatted, our audience along with you, we were hoping that maybe the FI outflow could be hitting a peak. Well, hopefully that time has come, and hopefully we'll see that rather soon. But let's talk about central bank action. What are you factoring in with regard to central bank action for 2025? From the Fed, they're hinting at around 2 cuts. The street is hoping for more. That's the equity markets. And also with regard to what the Bank of Japan will do. Because yesterday there was this fear that the yen carry trade unwind could be hurting equity markets. And part of that could be India as well. So what are you factoring in from both these two central banks?
Yeah, for the Fed, we've had for years, actually 2 or 3 years, we've had a strong view that inflation is going to continue to be a problem driven by very significant structural changes to the supply side of the global economy. And what that would mean is the Fed wouldn't be able to cut as much as many were hoping. If I may say so, that view's been approximately completely correct, and we still hold it. So we think the Fed will have probably room to cut a couple more times to 4%, but probably not more than that. So one question we get a lot is how can we be relatively hawkish and yet still bullish? We are still bullish US equities, by the way, and that's because of the growth and earnings powering ahead, in particular from that AI tech space, which we think is going to continue. So to summarize kind of all of our work, we continue to be relatively hawkish vis-a-vis the US, and yet we are still quite bullish because we think the earnings trajectory is likely to remain very robust, particularly in that AI space, which for us continues to be a mega force. On the Japan side, they're going to move very carefully. Right? The Bank of Japan is extremely aware they are in an extremely delicate position, but it seems to us now they should continue the slow policy normalization. So the next Bank of Japan meeting is January the 24th, just a couple of weeks away, and our expectation is they will push through a hike because economic conditions deserve that. So they have a much different inflation backdrop than for most of the last 20 or 30 years, meaning inflation seems to be much higher and also much more entrenched, much more sticky. So the Bank of Japan will move, but we think they are extremely mindful of the risks, and therefore we think it is unlikely they will kind of ruin the whole party, both for domestic Japanese equities and globally. So Fed cutting a little bit and BOJ hiking a little bit, both of them crossing the river by feeling the stones. Let's see how we go, but optimistic the Bank of Japan will do so, will hike in a very, very careful and considered manner.
Yeah, absolutely. They've been fairly restrained given the inflation prints in Japan, which remain quite elevated. Ben, finally, sort of wrap it up. I mean, it's very clear that you folks still like US equities. You're still believers in the AI story. Outside the US, where else would you put money? If not India, then where else? And I'm talking, I mean, short term, say the next 1 or 2 quarters of this calendar year.
Yeah, so we are overweight Japan. A lot's going on in Japan, but I think I can summarize it into 2 main points. Firstly, the nominal GDP outlook in Japan is totally transformed from where we've been over the last few decades, meaning much better. So nominal GDP is something like revenue growth for the overall economy, and that's gone from catastrophic to pretty good. So Japan's nominal GDP outlook is revolutionized in a much more favorable direction. That would be one thing. Secondly, in Japan, you also have a corporate governance reform story, which I think is going to continue. There's been some political kind of ups and downs, but the corporate reform story is ongoing and untouched. So that combination of nominal GDP, pretty good, multiplied by corporate governance improvement, we think is Japan up. So to give you one, we would cherry pick Japan as a place we like tactically over the next 6 to 12 months.
All right, Ben, it's a pleasure. Thank you very much for joining us and running us through, all of those sort of aspects. And it's a complicated puzzle, global markets, but they always are. And sometimes they seem a little more complicated than usual. And I think now is one of those times. Thank you once again for being here. What we'll do is we'll take a quick commercial break here, but let's quickly tease out the corporate interactions which are lined up, essentially what's coming up here and what you will see. So this, we'll talk about this new virus out of China, the HMVP cases in India, and how worried should one be. So we'll be speaking with a physician on that. 9 o'clock, you'll hear from DBS Bank India, and we'll talk about the currency. 9:20, we have an interesting market discussion lined up. Ashish Gupta of Axis AMC and Prashant Paroda of Wellspring Global Investments will be weighing in both on the domestic and foreign side. 9:40, Happy Forgings will be with us to talk about their H2 outlook. And Apurva Prasad of HDFC Securities at 9:50 with his expectation from the IT services sector for the third quarter. TCS, of course, on the 9th. And it's the economy at 10:15. Lata in conversation with Suresh Ganpati, Macquarie. That's the lineup.
We'll get into a snappy break. When we come back, we'll focus on all the top stocks in our special Top 10 segment. For the time being, I'll run you through the list. We'll look at IGL, BPCL, GAIL, Bharat Forge, Nuvoco, Kalyan Jewellers, Bajaj Finserv, Zydus Life, and Axo Nobel. Interesting. Most of them will likely to open up in the green, while NMDC could be the lone stock that opens up in the red.
Welcome back. So plenty of stocks on our radar as well as we are counting down to the open. And we've got, of course, our team standing by to take you through all the key names that you need to keep your eye out on today. So let's get started with the CNBC-TV18 list of top stocks to watch. And first up, we'll be looking out for a lot of these PSU oil and gas names. And Nimesh will tell us why. Nimesh, could there be another IPO soon?
Oh, absolutely. You know, BPCL board last night has approved IPO of Mahanagar Natural Gas. So it's a JV between IGL owns 50%, BPCL owns 22.5%, GAIL owns 22.5%, and Maharashtra government owns the remaining 5%. Now, Citi has written a note and they believe that it's a value unlocking opportunity for both IGL and for GAIL. For IGL, Citi believes that this can contribute nearly 45 rupees per share to their target price of 450. And for GAIL, it will contribute close to 12 rupees per share to the target price of 280. So, a value unlocking opportunity for GAIL and IGL. And maybe, because of that, you'll see all the three in the green, BPCL, GAIL, as well as IGL.
All right, Nimesh, thank you very much for that. So keep an eye out on all these names as we start trading. Bharat Forge should also be in focus. Rima is here to tell us why. Rima, good morning.
Hi, good morning. So December Class A truck, the details are out. In North America, Class A truck orders are up 39% on a year-on-year basis, though down 2% on a month-on-month basis, but they're above the 30,000 mark for the second straight month. So good news coming in for companies like Bharat Forge.
Okay, all right. Thanks a lot for that, Rima. Well, I'm going to talk about two stocks. One is Nuvoco and the other one is NMDC. Well, yesterday in closing bell itself, I said the market is sniffing something with regard to Nuvoco because the markets were lower, but Nuvoco as a stock price was more or less flattish in trade. And for the last month or so, they've been anticipating that maybe there could be some corporate action. And bang on, that's what came out yesterday post-market as. Now, they've said that the resolution professional have accepted the company's resolution plan for Vadraj Cement. They say that over the next many months, they'll be making some investments. What are the numbers with regard to Vadraj Cement? Well, it's close to around 6 million tons of grinding capacity and around 3.5 million tons of clinker capacity. The other details that they've said is 15 months as well they'll be investing, and by Q3 FY27, they hope to get the plant operational because this is a plant that's been shut for many years. Moving to the benefits for Nuvoco, how does it benefit them? One is that it increases total capacity. It's around 25 million tons, at 6 million tons. So it goes up by more than 20% in terms of capacity. The second factor is they'll go to around 31 million tons, which the street will like a larger cement company. And the other factor is predominantly they've been in East India as well as, in that belt itself. Now they're going to be getting a larger part of their mix towards North as well as West, close to around 40% out there. What's awaited? We don't know the valuation, so we'll wait by for that. What kind of capex are they going to incur? It appears, at least for now, the street could take it a little bit positively, though how they'll get this difficult asset up and running is a big question mark out there. So going with green on Nuvoco for the time being because they're adding capacity in a favorable location. Next up, I'm looking at NMDC. Now, reports suggest that the Steel Ministry is looking at KIOCL as well as NMDC. Potentially, they could merge. So that's what the report suggests. And they're saying that there could be some synergy benefits between the two. Now, if you look at KIOCL's numbers, the market capitalization is around 26,000 crores odd. That's more than 40% of NMDC's market capitalization. And what you're getting a revenue of close to 1,800 crores with a net loss out there. So Phillip Capital, they put out a note. They believe that the current valuation, since it's KIOCL, it's gone up to such an extent and it's trading with a market cap of around 26,000 crores. They believe it'll be negative for an NMDC. So going with a mild tinge of red on NMDC if in case this merger goes through.
All right, Nigel, thank you very much for that. So again, a couple of stocks from the metals and mining space there. Well, Kalyan is the next one that we want to focus our attention on. Mangalam is standing by with details. Mangalam, good morning.
Good morning. So yesterday, Titan's update came by and they reported a 25% growth in their jewelry business. All eyes were then on what Kalyan Jewellers would do because over the last many quarters, they have been outperforming Titan when it comes to growth on a low base itself. And that's exactly what Kalyan Jewellers has done. Their third quarter revenue has grown by 39%. India business has grown by 41% with the same store sales growth coming in at 24%. So India's love for jewelry continues in an otherwise weak consumer sentiment. Strong festive season, wedding demand and higher gold prices is aiding our love for the yellow metal itself. And not just India, the Middle East business as well grew at a slower pace than India, but 22% was strong as well. Now accounts for about 11% of their sales. And Kalyan Jewellers during the third quarter opened their first ever store in the United States. So that's something we'll keep an eye out on. They will open 30 stores in the fourth quarter, and they have a target of 170 stores in FY26 as well. See green on Kalyan Jewellers, with the only caveat being that from a valuation standpoint, Kalyan now is trading at a premium to Titan.
Yeah, I mean, my God, those are scorching numbers from Kalyan, almost 40% growth. Mangalam, thanks very much for that. Titan also had a good update yesterday, and the stock managed to hold out in the green in that huge sort of market slide that we were in the midst of. Let's see what Kalyan does today. But over to Abhishek now, who's also watching out for a couple of names today. Good morning, Abhishek.
So Bajaj Finserv has come out with their monthly business momentum, wherein the general insurance gross written premium is down about 2.5% on a month-on-month basis. But take no fact away from the fact that life insurance business has done really well for them. So over there, the individual single premium has grown by 23.5% on a month-on-month basis. That is December versus November. Individual non-single premium has grown by 59% month-on-month. The group single premium has grown by almost 61% on a month-on-month basis, and the group yearly renewal premium that's grown by 115% on a month-on-month basis, taking the overall written premium up by 60% for them on a month-on-month basis. So it should trade in green today. Back to you.
Thanks a lot for that, Abhishek. Well, let's hop across to Vinny. She's here to tell us about Zydus Life. Morning, Vinny.
Good morning. So there's some important positive news coming in for Zydus Life this morning. Now, the US FDA has accepted its filing and priority review for one of the new drug applications, that is CUTX-101. Now, this is an important drug, and they've been working on this since the last 1 year. It's mainly used for the treatment of disease of Menkes disease, which is a very rare pediatric disease. As of now, there's not much treatment for this disease. So, important one to watch out for that, because they've been granted 6-month priority review. Now, obviously, CUTX-101 was granted as a breakthrough therapy, also fast-track, rare pediatric disease and orphan drug designation by the FDA and orphan designation by the EMA as well. So important to watch out for Zydus Life. Could see some positive up move today in trade.
All right, Vinny, thank you very much for that. So that is Zydus Life in focus. Akzo Nobel is the company in focus. There is, of course, potentially a deal brewing there. Mangalam is here with details. Mangalam, morning.
Well, up until now, what was just speculation is now, something that has been put in on paper by the international promoter of Akzo Nobel itself. What they were mulling in terms of structure going forward is something that they've directed the board to do. The first part of the business, which is the industrial part, powder coatings and international R&D, will now be sold to, an indirect subsidiary of Akzo Nobel NV, which is the promoter of Akzo Nobel. So basically, the industrial business will be housed by the international promoter, but the decorative paints business will now be looked at in terms of an acquisition opportunity. The board has directed the international promoter has directed the board to commence evaluation and examination of acquisition offers for their decorative paints business. So this is something that we'll definitely monitor as we go along, because here on CNBC-TV18 itself, the management of Asian Paints has said that they will be interested in Akzo Nobel if it's on the block. Birla Opus has denied any acquisition opportunities in the very near future, whereas Berger Paints as well has said that they will do any acquisition only at the right price and not enter any sort of bidding war. So what happens to Akzo Nobel from here, the makers of Dulux Paints, is something that we'll most definitely keep an eye out on.
All right, Mangalam got it. So it's official now, and let's see what finally comes out of that proposed sale of the India operations. We'll quickly recap our list of stocks to watch then today. The ones that have positive news flow are IGL, BPCL, GAIL, Bharat Forge, Nuvoco Vistas, Kalyan Jewellers, Bajaj Finserv, Zydus Life and Akzo Nobel India. NMTC is the only stock on the radar that could open out in the red. Right, that's the stock list for the morning. Let's move on and figure out what's happening with commodities. We have Manisha joining in with the latest. Manisha, morning. So finally, that dollar index has taken a bit of a breather. What's the latest in your world?
Well, it should be a good day for markets, really. So it'll be because dollar index has taken a breather. The crude oil prices are off at 3-month highs. Well, crude actually was trading at a $77 a barrel yesterday, which is a 3-month high. But there is weak economic data from US and Germany. Saudi Arabia is raising prices for Asia buyers. So markets are looking at various things happening there, which has led to a bit of a decline in the crude oil prices there. But the strength has come back in some of these metals. So when you look at copper, we've seen near 2% of gains in the overnight market. Silver prices gained up by 1.5% as well. The ferrous metals have continued to decline. So you have iron ore prices trading at a 3-month lows. China mills will produce less steel due to low profitability and off-season, and that means that there is more iron ore prices gathering at Chinese port in sense of inventories, and that's weighing on iron ore and steel, both those prices today. But for this week, it still continues to be the Fed official speeches, the jobs data from US that comes in on Friday. That is where the markets will get further cues from.
All right, Manisha, thank you very much for that. So commodities there, and we'll revisit some of them later. But we'll take a break here. We connect with Amnish Agarwal of Prabhudas Lilladher for some fundamental stock conversation. That's coming up. Stay tuned.
Welcome back. You're with us on Bazaar Morning Call. Now, yesterday, some chatter in the market was around this, virus, the HMPV. Considering that we had some cases being officially reported in India, the ICMR confirmed 2 cases, 2 infants in Bengaluru, and the market perhaps started using that as an excuse to compound the selling. But what is the exact situation on ground? We spoke to a couple of experts yesterday as well. And we also have, I think, Dr. Chandrakant Laheria, who's consultant physician and very, very well-known epidemiologist. Thank you so much, Dr. Laheria, for being with us. Now, I just want to run this past you because some of the experts we spoke to yesterday told us that this is not a new virus. We've seen it before, we've dealt with it before, and one perhaps shouldn't panic at the outset. Same question to you. Is there any reason to think of this as more than a usual, cough, cold and flu virus?
There is no reason to believe that this is a dangerous virus or anything which we should be worried about this virus. As we know that this is a very old virus, first identified in 2001. This caused a very common flu-like symptoms, illnesses. In fact, the data which is available both for India and globally indicate that 1 in every 10 respiratory illness is caused by HMPV. And this is like for last 20 or 25 years. Other thing which is very assuring and what we know from scientific evidence is that by the age of 5, nearly 90 to 95% children get infection with HMPV. What it means that because children get infection with this virus regularly, so essentially they develop immunity. So the future infection or future exposure to this virus is very, very mild and often asymptomatic. So putting all of these things together, that this is not a new virus, most of the children get exposure and then they develop immunity. So there is no reason to worry and nothing to be concerned about. One of the important things which has happened that, of course, it has been reported in media and especially cases from China. But I also believe that this is linked to the heightened surveillance. The key that this is a virus HMPV, which is regularly seen by pediatricians and physicians in a clinical practice. But we do not test regularly for this virus because you test for influenza virus, respiratory syncytial virus, and other common viruses. If you want to test for HMPV, it is a very expensive proposition. And even if you test positive, you continue the same treatment. So testing is not done. In a scenario, for example, now, if India starts increased testing for HMPV as a surveillance mechanism, we would find that number of cases would go up. But for older virus, something like respiratory viruses, we should not be worried unless there is a new characteristic or unless there is something new emerging out of it. If we increase testing, number of cases would go up, and that's understandable.
That's very, very sort of reassuring, Doctor. I think people, any amount of whatever panic there was, etc., about the virus, I think people should be, these words are reassuring and we'll do more of this. But I think people should also be allowed to panic a little bit because, not panic a little bit, but it's understandable. 4 years back, it was around exactly the same time, right? January.
And the headline started from China. So, which is why I think the sudden concern.
I'm not very sure, but I think I remember I was out for the break and then I came back and I remember the first of those cases in China. And we, all the way till about March, we were tracking what was happening in China.
Yes.
And slowly. But these words are reassuring and hopefully this is absolutely nothing like that. But we'll see. Mr. Laria, so, you know, it's a normal thing, as you said. Most kids get it. Not most, but you mentioned a percentage of kids, right? I mean, do get it early on. Sorry, go on.
Most of the kids get this infection. So the evidence shows that by the age of 5 years, 90 to 95% of kids get this exposure and this infection, and thus they develop immunity. So it's very innocuous, very harmless virus which is circulating around. So that's part one. And then the second assuring part of this, because they develop exposure infection by age of 5, so even in the future, because this virus is circulating always, as an adult, if they are exposed, even then it's very asymptomatic and mild. So we do not have to worry. Only time when anyone need to be worried is if there is a new mutations or there is a new set of information emerging, which is not there right now. And
so the China, so Dr. Laharia, exactly on that point, so whatever we are hearing out of China, is that some new strain or some new mutation, or is it still the old virus from the evidence and knowledge that you have at hand right now?
So we understand this science very well now. So for example, if an existing testing kit can identify a virus, which essentially means it's an old virus, and also the genomic sequencing technology is so advanced that we can immediately identify whether there is a new virus or old virus. So this is an old virus, the same virus which has been circulating. What we are also hearing from different media sources that China has heightened the surveillance for all the respiratory illnesses, and that's how they have seen this increase. And third thing, which is very assuring, that even Chinese authorities have said that even though they are finding an increase in the number of cases, but the number of cases in 2024, by the end of 2024 until now, is much lower than what they were in 2023. So the winter, especially starting November till January, February, March, is the flu season in China, and also a second flu season in India. So this is very on the expected line, and there is no major increase.
Sure. All right, Dr. Laharia, that is extremely sort of positive to hear that this is an old virus, and you know, there's nothing really to be alarmed or worried about here, and perhaps even in China, it's just seasonal. Thank you very much for joining in and giving us some context and perspective on the matter. Well, with that, let's move on now. The government has launched the second round of production-linked incentive scheme, the PLI scheme for the steel sector. Speaking to CNBC-TV18, the steel secretary said that the outlay of 4,400 crore rupees is a carry forward of the savings from the first tranche of 6,400 crores. He adds that the investments and capacity thresholds have been reduced by 50%, which should benefit the industry.
We rolled out the first PLI for specialty steel, and we had substantial savings in the scheme outlay. So within the same scheme, we have invited applications for a second round. We have named it PLI 1.1. The idea is to make the scheme more flexible, more investor friendly, and focus on areas where there is more need of specialty steel.
In order to make sure that there is greater offtake, because that was the concern with the earlier scheme, that the offtake has been slow, has the threshold for investment, for entry, been lowered in the eligibility criteria, and to what extent?
So there are 25 subcategories in the 5 main categories of specialty steels. We have done a few modifications. Number one, we have for augmentation, because many players, they have the basic facilities of steel making. They just augment their capacities in terms of specialty steel. So we have reduced the thresholds, both capacity and investment, by 50%. So we have said that for augmentation, the threshold will be 50% as compared to a greenfield. Secondly, as I said, for CRGO, we have reduced substantially the thresholds. So these are the two things we have done.
All right. Now, speaking to you about the safeguard duty, which has been a long-standing demand of the industry, the matter is with the DGTR right now. What is the expectation? What is the current status of the probe?
So, as far as the safeguard duty is concerned, you know that it is a quasi-judicial kind of a process which the DGTR has to take. They have invited responses, and the last date is 22nd of January. So the DGTR will give its recommendation after that, and then the government will take a call on the safeguard duty. But having said that, it is a fact that we need about $120 billion of investments if we want to be if we want to remain self-reliant in the steel sector.
All right. My final question would be about the disinvestment in NMDC. What is the status of that? We were hearing that the proposal is now in very advanced stages.
NMDC, there is no disinvestment.
Right. In the steel sector.
You are saying in the NSL?
Yes.
Yeah, so there is a decision of NSL, I think in 21 the decision was taken. As far as the steel industry is steel ministry is concerned, there is no fresh development on that side.
All right, so the big takeaways out there from the steel secretary is that the PLI, they believe, will make India more self-sufficient, smaller in the entire steel scheme of things. But also he says that they're lobbying hard and they're hopeful for some decision with regard to duties that could be imposed that protects the domestic steel industry from imports. And on NMDC steel, he says there's no movement, at least as of now. So those are the broad takeaways from the steel secretary. Step into that quick break. You come back, we'll get our technical experts with us. Mitesh and Sudarshan are waiting for us on the other side. Welcome back. Hope you're having a good morning. As promised, we have Mitesh as well as Sudarshan who join us to help us out with some technical trades. Good morning, gentlemen, and good to see you, Vin. Well, Mitesh, you go first. Yesterday, I think you would want to carry your short positions. I think that was the call that we made. You could help me out with that. But today, we're likely to start off mildly in the green, though it'll be a feeble opening because that could get sold into. What's the outlook you're looking at and the levels?
Good morning, Rajiv. So I think a couple of things. One, the worry of the decline kind of for me stemmed from the fact that it is the banking index or the bank nifty broken below 50,500 zones. So while there is some support at 49,700, if you look at the chart of the bank nifty, it made a dual low around the August month, in the middle of the August month, around 49,700, two closings around this level. So we just bounced back from there, but the indicator position on the weekly chart has turned negative. So my idea is that while we might open with a gap up today, in case the gap gets sold into, I would again want to look at, shorting the financial names. I think that's the first on the list. A disclaimer that we have some bank nifty put spreads, so which is a negatively biased strategy. And as long as the bank nifty is below 50,500, 600 zone, I think I would maintain a negative view on the bank nifty and thus on the nifty. For the time being, I think today with gap up opening, the nifty could attempt a pullback to its 200 average, which is 23,950. But again, for me, unless it will be crossed by 50 points, it will be a bounce which I would want to, get into some kind of put spreads or buy into put options.
Gentlemen, morning. Mitesh, so sorry, what level on the upside would be that at least we need to get to?
Yeah, so on the bank nifty, I think 50,500, 600 zone is a very strong supply zone. So anything closer to that, I would want to attempt shorts. And on the nifty, the 200 average area, 23,920, 950 zone is where I think selling can be looked at.
Okay, all right, fair enough. Sudarshan, morning. What would your advice be?
Yeah, good morning. Well, yesterday the idea was to go long on a dip and keep a stop at 23,800. So the long position was quickly closed at 23,800 because that level came very fast. Now, I never like to go short in the Nifty because I do a lot of algo simulations, and I have found that the Nifty doesn't make money on the short side. Stocks do, but never the Nifty. So once we find that the trend has changed or reversed or not anymore on the long side, the idea is to step aside and wait for the trend to resume. Now, that will happen for me if the Nifty crosses 23,800. Above that, you start looking for dips, buying opportunities, keep a 100-point stop loss on the downside for your long positions, a tight stop. Below 23,800, there is no trade. If it crosses, shows some signs of strength, goes above that level, then take a long trade with tight stops.
Okay, got it. Got that, Sudarshan. What about individual stocks? If you could help us out with a couple of trading calls.
Yes. Well, I'll start with the one short side idea. That is HDFC Life intraday short to stop above 614, 614. The other three are all long suggestions buying. This is a dip. all the time we hear experts say buy on dips. So that is something that we should also make actionable. Tata Consumers is a buy with a stop under 930. L&T is a buying opportunity with a stop under 35.85, and Godrej Consumer, which is bottoming out, that is a sense. It came in my list a few days ago also. Godrej Consumer is a buy with a stop under 1110.
Got it. Mitesh, what would be on your list?
Yeah. So I have more of buy calls today, Prashant. But again, as I said, I think in case the index gap gets filled, I would again turn into short aggressively. Though on the index, we are running some short positions as well. On the banking side, Bank of Baroda is this sole short call today, around 230 to 29.5, sell with a stop at 235.5. Look for 218 as the target area. On the buying side, I have SBI Life. Disclaimer, we have some call options here. So there's a long bias. Buy here with a stop at 14.19 for targets of 14.65. About India is a buy with a stop at 29.490 for targets of 31,000. And I have Adani E-Solutions. Now, the stock is doing a range of about 760 to about 850, 855, and it's now at the lower end of the range. So I have a long stop loss at 759 for targets of 800 or so. But in case it breaks 759, then I'll even explore shorting opportunities.
Okay, all right. Thanks a lot for that, gentlemen. Well, time to slip into a short break. On the other side, though, we'll get you the pre-opening rates as the markets open up. We'll also be joined by Ashish Vaidya of DBS Bank India to discuss the rupee trajectory. Stay with us.
Okay, there's 18 minutes to go for the market open, 3 minutes to go for the pre-open session. The clock, of course, is ticking down to it. Lots to discuss. Our guests are with us. But just want to address this story as well. The Heavy Industries Ministry has written to the Finance Ministry in support of auto industry's demand for a GST reduction. Parishad is here with details. Parishad, good morning.
Well, in June last year, the auto industry had approached the Ministry of Heavy Industries requesting them to consider a GST reduction on CNG two-wheelers from 28% to 18%. The reason being they felt that CNG being a green fuel can actually increase the penetration of CNG two-wheelers. It will also, because the running cost is low, it will bring the vehicle within the reach of the common man in the remotest corners of the country. Having said that, the MHI initiated discussions with different ministries, including Ministry of Environment and Forests, Ministry of Petroleum and Natural Gas, Ministry of Road Transport, and the Automotive Research Association of India. Now, all of them have come out in support of a GST reduction on CNG two-wheelers. In fact, the Ministry of Petroleum and Natural Gas, according to our sources, has told the MHI that this would help India in meeting its lower carbon emission goals as well. So in light of these recommendations from various ministries, we hear from our sources that the Ministry of Heavy Industries is also supporting the demand. They have written a letter to the Secretary Revenue in the Finance Ministry urging them to consider this request. Having said that, now this is a demand that the Finance Ministry cannot take up or decide on its own. It has to go to the GST Council. But if it happens, it will be a big move for players in the auto industry which have CNG two-wheelers. For example, TVS Motor Company is going to come out with a CNG scooter very soon. You already have Bajaj Auto, which has a CNG two-wheeler. So this could be good for the two-wheeler industry if it happens, but it all depends on the GST Council.
Okay, all right. Thanks a lot for that, Parikshit. We'll keep an eye out on all the developments and we'll keep coming back to you as you pick up something new. Well, let's move on then. We have Sneha Seth, Derivatives Research Analyst at Angel One, who joins us on the show. Hi, Sneha. Good morning. What's your trade that you're looking at on the index? It's a little bit confusing, right? Because yesterday you had unwinding of long positions. The FIs are net short as well. But the texture of the market seems to have got disrupted post yesterday's fall. Give us your trade.
So very good morning. Yes, if you see last two sessions selling was like it was. If you see the individual counters, even the chart structures has literally spoiled. And in fact, if you look at the couple of data, like if we talk about FI's activity in index future, the long short ratio is around 18, which is oversold. If you look at the put call ratio, which is around 0.72 now, which is again hinting oversold condition. So overall, I believe looking at the overall data, market looks oversold, but the kind of selling we have seen, I think market may continue to head at least towards 23,200, 23,000. So at this point in time, no one, one should avoid any kind of aggressive longs in index and wait for market to settle. Individual counters, that should be the focus for now. So as far as individual counters are concerned, I have a 2 sell call. The first one is from the banking space, that is IndusInd Bank. If you look at this counter, it has already been in the pressure. Yesterday, down by 3%. I believe we have seen decent writing in call options. So I believe one can keep a strict stop loss of 1020 and go short over here for the target of 920. And apart from this, Tata Power looks good for a sell. Again, this counter had a support near 380-85 zone, which it has breached. So I believe that support zone should be acting as a resistance. So with a strict stop loss of around 385, it's a sell for the target of 357.
Okay, all right. Got that. Thanks very much, Sneha, for the calls and for the advice for trade today. So those are some cues coming through for both the F&O market as well as, of course, the technical trades that you can work with. Let's move on now. Of course, yesterday's big talking point was the currency, which has continued to move to new lows against the dollar. Weak global cues, rising crude oil prices and selling by foreign portfolio investors, of course, have been key headwinds for the currency as well. 85.77. Yesterday, the currency had moved past 85.80 as well. So what is the way forward for the rupee? We've got Ashish Vaidya, Managing Director and Head of Treasury and Markets at DBS Bank, joining in for a quick chat. Ashish, morning. Thanks for taking this call. So, this is what we were grappling with yesterday as well. The pace of the decline of the rupee has actually accelerated in the last couple of sessions. What do you make of it? Are you expecting central bank intervention? But it's not just the Indian rupee. The dollar has been strong internationally. The yuan has been weakening as well. What are the factors at play and what do you see ahead for the next couple of weeks?
Quite right. So I think I'll sort of slightly disagree with you that the pace has actually, while the pace has increased a bit, but it's in line with what the global trends are. So the dollar has been strengthening, especially over the last about a fortnight or so, more so in a stronger manner, and that's what we are seeing. So the entire outcome of what you are seeing in the USD-INR pair is something which is broadly a global trend. And obviously, if you look at it from a portfolio flows point of view and, really not meaningful money coming in the fixed income, I think India continues to face some headwinds. And that's exactly the reason why we are declining, in addition to the fact that the global trend of the dollar is also very strong. In fact, the index has actually moved up from 103, 104 levels to 108, 109. And I think till the Trump presidency takes over, the kind of market sentiment that is sort of continuing, I think the dollar strength will continue for some time.
Okay, so any immediate levels, Ashish? I mean, I don't know, is 86 a given?
I don't think we should say that it's a given. I think broadly you have to look at why the dollar, especially the pair of USD-INR, are really weakening, right? If you see, there's been reasonable amount of intervention from the central bank, and broadly, we have a forward position. The Reserve Bank has a forward position of about 40 billion in the onshore markets, and there is some outstanding positions in the offshore as well. So technically, we are somewhere lower than 600. If I want to be a little magnanimous on our reserves, while optically it obviously looks at about 640. So the pressure is there, and the fact that we are a current account deficit country, I think the pressure will continue. If you're asking me to give a range for the next maybe about 15-20 days, I think broadly I would think anywhere between 85.5 to 86.25 levels. Because the dollar is, to my mind, going to gain further strength in the next few days.
Ashish, hi, good morning. Actually, the dip that we've seen in the dollar last night, it kind of is very similar to what we had back in 2016. 2016, 2017, right? I mean, early days of Trump. I mean, right before the inauguration, there was a sharp sell-off in the dollar. So maybe in the very near term, there is more to go here, right? On the downside, as he takes over, and then of course policies are enacted, and then of course there is dollar strength, as you put it. I mean, from a Indian investor point of view, Ashish, you know, rupee was at 84 at the close of the last quarter. It's where it is now. It's especially, for example, IT services companies, that is straight away a translation gains, right? I mean, it's like a automatic earnings adjustment, maybe a little bit of revision higher when we hear from these companies at the end of the quarter.
No, obviously, I think this is positive for the export sector, and I think that's probably what is playing out in the market as well. I think fairly the IT is resilient. I think important point to note is last time, the last Trump presidency preceded by about 8% appreciation of the dollar index, followed by a 15% depreciation. But the tariff discussions came in the second half of his presidency. The point here is that this time the tariff discussions are upfront. So we don't know whether the appreciation is going to be, about 8-9%, depends on how really the fundamentals play out. But this time it could be a little bit more bloated, and we'll have to actually see what exactly are the outcomes in terms of policies when the Trump presidency takes over. The market is therefore going to wait for some time. So, typically in India, you would have seen fresh allocations coming in the first quarter of the calendar year. But this time probably get pushed back simply because there is a need for clarity as to how the global fund managers would want to invest.
I mean, usually first 20 days, we see that. Ashish, sorry, that 8% and 15% number that you gave, that is 8% appreciation of the dollar before Trump took over in 2017, January 2017, or
so basically,
and then 15% fall after he took over.
Yes. So basically, he got elected in November. He took over presidency on 20th, but till 17th, the appreciation continued. And just before his presidency, the depreciation started. But this time, it's accompanied by tariff discussions. So I'm not sure exactly how this will play out, but this will be a little longer play out. And the volatilities, I think, will increase.
Is there in the currency, in the forex market, on the equity side, there is a little bit of a fear about a growth scare in that sense, right? I mean, is there, are we in a bit of a fix here, a bit of a flux? Is that a big factor, a big topic of conversation? Ashish?
I'm not sure about what the equity market is sort of anticipating, but from a fixed income point of view and the way we look at the macros, I think broadly growth is sort of slowing down. The fact that the government expenditure has been lesser and the fiscal is sort of much more well managed by the government. But the fact is that the government expenditure is falling short of what the market has anticipated. That really brings in the growth slowdown. So I think it's in bits and pieces. We'll have to wait and watch whether the expenditure revives again. It's early days, but I think it's slowing down.
Okay, all right. Ashish got that. Thanks very much for weighing in. Let's see how the next couple of days play out for the dollar and, of course, the rupee as well as we move up to the inauguration date. Thanks for joining in. Back to the equity markets right now. Let's take stock of what's going on. So we've got a bit of green, which is very familiar, right? This is how we start. The issue is the selling that comes in later. Right now, 63 points higher on the Nifty. That's what we are working with. And in terms of just, the flavor, actually it's pretty much across the board. The overall market is moving higher. Let's go to our technical experts once again and get some final calls before we hit market opening. Sudarshan, so what would your 9-10 call be?
Well, consider buying Tata Consumer with a stop under 930.
Okay. And Mitesh, what about you?
Yeah. I'll go with a sell on BOB around 230 for targets of 2.
Okay, all right. By the way, Mitesh, just a quick one. Zomato, how is this one looking?
So, Prashant, Zomato, if you look at the last few weeks, the stock has kind of gone into a corrective sideways activity. It's more of a time-wise correction. My sense is that as long as the stock manages to hold these levels of 250, 245, the range of stock price movement will be between 290, 300 on the upside to about 245, 250 on the downside. Only if it breaks 245 will I be worried. As of now, looks like a normal sideways activity.
Okay. Yesterday, I think there was a Jefferies downgrade on Zomato, citing competition. Will we, when the numbers come out for the third quarter, the question is, will we see the impact of that competition in the numbers? I think that's the big one. We'll have to see, but stocks have fallen from the highs. Mitesh, thanks very much. Actually, we want to talk about Zomato a little bit more. Hormuz is standing by, but not just Zomato, ONGC as well. Hormuz, take it away.
Jefferies, as you just mentioned, has downgraded Zomato. It's a hold rating now from a buy that they have done earlier. They've also cut their price target to 275 from 335 earlier. And this quick commerce competition, which may impact the profitability, is Jefferies' biggest concern, because they say that the 2025 will be a year of consolidation for Zomato shares, considering how it outperformed in 2024. And they have also cut Blinkit's EBITDA forecast sharply for FY26 and 27, and they have halved their target multiple for it to 6 times. And for Zomato itself, they have cut their EBITDA estimates for FY26 and 27 by 12 to 15%. The profit estimates have been cut by 17 and 18%, and the EPS estimates have been cut by 20 and 21% for the next year and FY27. So sharp downgrades coming in there for Zomato. The stock is likely to open 3% lower after another 3% drop yesterday. Now, on the flip side, ONGC, where CLSA has made it a high conviction outperform stock, the 360 rupee price target there, it's almost a 40% upside is what they're indicating, and they're saying that the removal of the windfall tax may also allow ONGC to earn a higher realization compared to a $75 a barrel if the crude oil prices recover, which they are as of now. And they're also saying that despite multiple triggers in place for the stock, it is trading well below its own historical average as well as that of its peers as well, and it is also offering a very attractive dividend yield at 6%. So therefore, CLSA has an high conviction outperform on ONGC. The stock likely to open in the green today.
Absolutely, and these stocks are really reacting to those inputs. ONGC is the top Nifty winner right now, and Zomato is down 3% on the concerns that Jefferies has raised. Okay, but ONGC is not the only oil and gas, PSU oil and gas stock we'll watch out for. There are several others. Let's go back to Nimesh and revisit that story on potential value unlocking. Nimesh.
Yes, sir. So now the BPCL board last night has actually approved an in-principle IPO of Mahanagar Natural Gas. Now, it's a joint venture between IGL, that owns 50%, BPCL owns 22.5%, GAIL owns 22.5%, and the Maharashtra government owns the remaining 5%. Now, Citi believes that this can be a value unlocking opportunity for both IGL as well as for GAIL. For IGL, Citi has estimated that this can contribute close to 45 rupees per share to their target price of 450. So it's a significant value unlocking for IGL. And for GAIL, this can contribute close to 12 rupees per share to their target price of 280. So IPO for Mahanagar Natural Gas would mean a value unlocking opportunity not only for IGL, but for GAIL and for BPCL as well.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's hop across to Mangalam. He's here to tell us about the update that AkzoNobel put out. Mangalam, take it away.
Well, if you look at the AkzoNobel international promoter, AkzoNobel NV, that is, they've gone ahead and directed the board to act upon 2 things in particular. The first one, remember, AkzoNobel India has 2 businesses, the industrial business, which is powder coatings, and the decorative business. They've said that first things, the industrial business and the international R&D center should be sold to another subsidiary which is not directly related to AkzoNobel, but is the subsidiary of AkzoNobel NV, which is the international promoter, and the resultant AkzoNobel, which will then have just the decorative paints business of the company, must be considered for acquisition by other companies as well. So the international promoter has directed the board of AkzoNobel India to consider, evaluate and examine any such potential offers that come in for AkzoNobel's decorative business in India. And that's exactly why we're watching out for that stock. Why do we, look out for who the potential acquirers could be? Because we've had conversations with Asian Paints, Berger, as well as Birla Opus in the past. Asian Paints has said they would be interested if the company is on the block. Birla Opus has denied any acquisition in the very near future, whereas Berger Paints has said that they will not enter any acquisition where there is a big price war. Only at the right price is what they will consider when it comes to AkzoNobel. All things said and done, the lure of a potential deal and perhaps an open offer thereafter would keep the stock afloat in an otherwise wobbly paint industry right now.
Forget AkzoNobel. Now we're running into opening. I wanted to revisit your numbers on Kalyan. Look at that stock. It's up 4% in pre-open. and scorching growth. Maybe later, after open, we'll get Mangalam back, because I just wanted to, go back and remember for how many quarters has Kalyan been outpacing Titan in terms of growth, and therefore the premium has been narrowing as well. What a move on Kalyan. I mean, just 2 years back, the stock was around 120, 130. Today, 700 plus.
100 times earnings, 120 times earnings on Kalyan. And but growth has come. I mean, and that's the reason why it's trading at such rich multiples as well. So hand in hand. About 1/3% higher as far as the market open is concerned. 23,706 on the Nifty, 78,200 on the sensex. You've got, it's a higher start. I mean, after yesterday's very, very painful day, there is a little bit of green, a little bit of relief, as the gift Nifty was indicating. Can we build on this and kind of get on some of these daily averages, get above some of these daily averages, hold on? That's going to be crucial. But this is the start, which is in the green. Nifty Bank is about 0.5% higher as well. You've got 1,200 stocks which are higher, about 500 stocks which are lower. So that is the advanced decline ratio. IT index is up about 0.75%, 300 points higher on the Nifty IT index. You've got 7-8 names which are down, everything else is higher. Easier to count what is in the green, at least as far as the starting point is concerned. That's a heat map, largely on the green side. Sylvie.
Okay, when it comes to stocks, ONGC, the stock that we were just discussing on the back of the brokerage note, is doing really well. It's a Nifty winner now, 2.5% higher. BPCL is higher thanks to the value unlocking potential with the City Gas Distribution Company in Pune. Now, that's a joint venture, so let's look at the other joint venture partners as well, GAIL and IGL, which are the other entities that own the Maharashtra entity. They're all up to 1 to 1.5% on the higher side. By the way, Zomato has slipped. It's down about 4%, so taking full cognizance of what Jefferies is saying. Jefferies is concerned about competition, and that's why they've downgraded their estimates on Zomato. Anyway, on the Nifty, it's beyond some of these PSU names. Shriram Finance, Titan, Tata Consumer, HDFC Life, IndusInd Bank, Nestle. So you can see it's a pretty vibrant screen right now. It's cutting across sectors. Bajaj Finance and Finserv are doing well. Tech is doing pretty okay. HCL Tech, Tech Mahindra, these are stocks on the way up. The Bank Nifty is also holding higher. So let's just quickly throw up the big banks. Kotak is up about 0.5%. HDFC Bank is at the flat line, and this is the tricky part. Let's see which way these stocks go. SBI is doing much better, almost 1% higher on SBI. State Bank of India is up about 1% as well. So let's just wait to see what the larger banks do. But right now, it's a good-looking screen. M&M and Apollo Hospitals are really the only two stocks which are slightly negative. And by the way, Bajaj Auto is not really reacting too much. Remember, Parikshit has been reporting on the prospects of perhaps, maybe lower GST for CNG bikes, and we know that the Freedom 125 is a big product for Bajaj Auto. But right now, the stock's not latching onto that. It's down about 0.5%.
Well, a good start, actually. We are up close to 150 points on the Nifty. For the Nifty, the mark you're looking at is 23,900 or thereabouts. Nifty Bank, well, it's opened up with a gain of around 300 points, got slammed yesterday. The mark you're looking at on this one is 50,600. Both these two are the 200 DMA, and that's the reference points that we're looking at. Stocks that are moving around from the broader markets. ITI, in a world of its own, even yesterday the stock was buzzing around. Remember, float is limited, but that stock is up another 5% in today's trading session. Aegis Logistics, another one that moves quite well. It's been a big outperformer in the last few years. Even this morning, that's opened up with solid gains. A few more notable movers. Ashoka Buildcon, big uptick is what we're seeing in in the initial moments of trade, and volumes as well rather large. So that stock's opened well. Kalyan Jewellers, Surbhi's been telling us about how those numbers are quite good, and Mangalam as well. So both those stocks are doing quite well. The recent listings: Vishal Mega Mart, big volumes, opened up well in the green. Transrail Lighting, big volumes, opened up well in the green. And Invero Infra, all these three have opened up well in the green, and the volumes are quite large out there. What's not doing too well? Well, Utkarsh SFB, that stock is a little bit under pressure. I think, if I'm not mistaken, it was down close to around 5% in the initial tick itself. So that stock as well comes up for you on the screen. And Zomato, just take a look at that. Now it's down close to around 5%. Volumes very large out there. A couple of notable movers. So we had told you about Nuvoco. Remember, it's been a big underperformer, but they have acquired this Vardaj cement asset. I'll tell you what, logistically, it's a bit of a problem. The Gujarat market I've been tracking for the last 10 years or so. It's a very competitive market. But for the time being, the street says your capacity goes up by close to around 20%. You're getting exposure to new geography. So that stock is up close to around 2%. We'll try to get chatting with the management, maybe today as well, or tomorrow as well. So that's one stock that's opened up in the green. And KIOCL, market capitalization now 26,000 crores. Reports indicate it could get merged into NMDC. So if that report is true, then maybe those shareholders are quite excited. So KIOCL, volumes very, very low. But for the time being, the stock is up 2%. Need to note, yesterday as well, it was up close to around 5%. Float limited on this one as well. So keep that in mind. For sure.
All right, let's look at a few other names here. So, by the way, the Nifty is now 135 points in the green. We're about 23,751. So settling down comfortably with a 100-plus point gain on the Nifty with about 3.5 minutes in as far as today's market is concerned. It's some 6:1 advances to decline. Still early, but 6:1 in favor of advances at this point in time. So we pointed out Zomato. Swiggy is down about 1.5% as well. I think Naukri is down about 2.5%. That is also got very large volumes for this point in the day. There is Reliance Power. Ease My Trip, I think, went up sharply yesterday. It's down about 1.5%. Metropolis down 1.7%. PVR Inox. But really, I mean, the Thyrocare is down a little bit. Thyrocare is down about 4.5%. But this is what is down. But it's a limited list, at least if you want to sort of look at price moves along with volumes. It's a limited list. Actually, it's a limited list for stocks on the upside as well, if you want to add the volume bar as well. So I think we've already mentioned quite a few. I think AG's Logistics is one name. It's the second largest volume-led mover, 910 on AG's Logistics. So yesterday as well, so day before yesterday, last Friday, stock left off at about 810. It's up 100 rupees since then, between yesterday and this morning. The first few minutes, it's up 100 odd rupees on that one. Ola Electric is back at about 80 bucks, 3% in the green. EMBDL, I'm not sure, this is a name change, but 6%. And it's got volumes, and that's why it's coming up on the list. That's EMBDL, 127 rupees on the price. India Mart is up about 4%. There's Oil India, ONGC. These upstream oil companies are looking good, and they're holding on. Goldium is up about 3%. K Fintech. So, yeah, I mean, there's enough and more activity as far as single stocks go.
I just wanted to mention Utkarsh, since Nigel brought this up, Utkarsh Small Finance Bank. I think their Q3 update came in after market hours yesterday. And there, Abhishek points out that the collection efficiency has dipped. And a lot of these small finance banks and microfinance institutions, the market's watching out for any possible hints on asset quality very carefully. Their collection efficiency has dipped from about, I think, 92% to about 88%. Maybe that could be weighing on sentiment this morning.
Well, just one more thing. Yesterday, all medical experts were telling us that the virus is not something you should be worried about.
Yes.
But the markets thought differently, and we had all the diagnostic stocks that were zooming away. Today, it seems both are on the same page, the medical experts and the stock market experts as well. All those stocks have given up what they put on yesterday. You have Thyrocare, that was one of the big gainers yesterday. That's one of the big losers today. And Dr. Lal's, Metropolis, all of them a little bit softer. So,
on a lighter note, Nigel, when you put it like that, medical experts and stock market experts on the same page, that sounds scary.
No, the stock market is a different virus that it's dealing with. It's called the FBI exit virus. But more on that later.
Let's address that, right? And we have our market masters joining us now. Ashish Gupta, Chief Investment Officer at Axis AMC. We have Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investments, joining in as well. Gentlemen, good morning. Great to have both of you here. So we've got, two strong, one local asset manager, and we've got a global asset manager as well. I want to put the blame at your doorstep, Prashant, on a lighter note, for all the selling. So let me start by asking you, when is this going to come to an end? As I was making this point in the morning, at the end of September quarter, FIs were already underweight relative to India's weight in the MSCI Asia ex-Japan benchmark. And they've sold about some $20-25 billion since. So this is some serious selling. FI weighting will be at a decadal low, if not more. So what's going on?
No, I think what's happening is obviously, India's valuations have gone up ahead of all other emerging markets. And some people think it's a good idea to kind of lock in some gains. However, I think this is a period of a very interesting time with Trump coming back and tariffs again being in picture. So overall, I think for emerging market funds,
flows will be very muted till we get some clarity on the tariff picture. And I think the other big basket in EM is China, which, people still are a little bit worried about the real estate sector and how things will develop there, and also whether the government will do a big enough stimulus to counteract some of the consumption slowdown there. So I think overall the macro environment is a very cautious environment in the near term for EM investors.
Okay, all right. Got that. Ashish, just one other element, the local growth scare. Is there a bit of a growth scare? And is that impacting price action according to you? And how much of that is a factor? I mean, you're a veteran, and you're earlier after a veteran banking analyst as well. And that's the sector which shows us some of this stuff early on. So what are your thoughts on the growth side?
I think definitely, and I'll agree with Prashant that there is, of course, the global macro backdrop is not as strong, and really, to my mind, the trigger point of the big selling in for the institutions has been the fact that the U.S. yields have continued to go up, right? So U.S. 10-year yield is now up more than 80 basis points from where it was in the middle of the year. And that's really been, to my mind, a bigger driver of the FII outflows. Valuations in India have been expensive, and I don't think that really has changed materially for FII selling to happen. In fact, if you see the overall flows last year from FIIs, they have actually sold large caps, they have sold financials, which are the relatively cheaper sectors that are trading below their historic averages, and they're actually bought into mid caps, small caps. They're bought into the primary market, and we all know the multiples many of these new IPOs are coming in. The other factor, of course, more on fundamentals, is we have had muted earnings growth for the past 2 quarters. Earnings growth has come down to single digits. And in the last couple of days, we have seen the third quarter update coming from many companies, including the banks. And that is continues to be quite soft, right? So you have had some of the largest banks growing at 3, 4, 5% their loan book, compared to history where they were growing at close to 20%. So I think there is both this aspect of the macro not being as accommodative as it has been in the past few years, as well as the fact that we have some degree of slowdown that has come in.
Ashish, hi. Great to have you as well as Prashant with us this morning. So let's just complete that point, and then I want to come to the valuation picture, because you folks in your 2025 note also highlight that valuations are another headwind for this market. But first, let's complete the growth point. The market wants to believe, or at least the narrative so far has been, that this is transient. Second half, things will pick up. The government will come in, government will start spending, and, in general, a lot of corporates that we speak to, they're also saying that the growth will pick up in the second half. Do you believe that?
So I think if we look at what has led to this slowdown, and we can probably, on a macro basis, look at 3 factors, right? So one, of course, is the slower government spending. That was particularly impactful in the first quarter because of the election. That is certainly changing, and we have seen over the last 2-3 months that pick up. The second was the monetary tightening that happened, and there we have had since August the RBI stance becoming more accommodative and neutral. But unfortunately, we have had this simultaneously exit of foreign money and pressure on the currency. And the central bank intervention in the forex market has meant that despite RBI becoming more neutral, we have not really had the liquidity coming back into surplus. So I think the two headwinds on the fiscal side, we clearly see that has turned more positive. On the monetary side, I think we still haven't seen that because despite the RBI change in stance, the actions on the forex market have meant that liquidity continues to be in deficit. The third, and probably somewhat related to the monetary stance, is the negative credit impulse. So from a year ago, when loan growth was running at about 16-17%, loan growth has come down to about 11%. So I think that is really the other crucial piece that we need to see changing for growth to come back. So we need loan growth to revive. We need liquidity conditions to again become more amenable. In addition to, of course, the fact that the fiscal spending is coming back.
No, so just to understand what you're saying, and it's very interesting we're having this conversation today because I think the first advance estimates of full year GDP, they're coming out at around 4.30 this evening. So we'll know the government stance on where we stand as well. But so Ashish, second half, recovery in corporate earnings or no?
So I think compared to second quarter, there will be a recovery in earnings. But I think we will still not match the growth rates in earnings that we have seen over 22 and 23. So this year earnings growth will still be much lower than what we saw in the last 2 years.
All right. Hi, good morning, gentlemen. Good to see you in. Ashish, just want to drive home that point then with regard to earnings. The markets are down by close to around 10% or thereabouts from the peak. And we have seen that earnings pullbacks as well. EPS cuts have been to the tune of around 10%. So maybe some part of that earnings downgrade is mostly done. But do you think now there's a case where we see a PE, derating of the PE because we're giving it big multiples on the Nifty, 20, 22 times or thereabouts, because you're factoring in better earnings. Now, if the earnings don't come about, do you think that there'll be a case where you see the PE multiple as well getting derated?
So I think more than Nifty PE, I think where the PEs are vulnerable is more on the mid-cap and the small-cap space. So if you see small cap PE is still about 25 times, mid-cap PE is still about 30 times. We have seen, actually very interestingly, in the last quarter, while the market has corrected by about 10%, surprisingly, mid-cap and small caps have actually continued to outperform. So I think the mid-cap and the small-cap index both are down only about by 6-7%. So typically, the market behavior you'll see is that mid-cap and small caps are higher beta. They will go up more than large caps and they will fall more than large caps. And that hasn't happened yet. I think one of the reasons is that market is still more optimistic on earnings here. We are seeing several parts where earnings have been more resilient. So whether you look at the capital goods sector, whether you look at real estate, travel-related sector, capital market beneficiaries, all of which are really more represented in the mid and small cap space, the earnings growth has not been bad. I think on the large cap, the earning disappointment has been largest. For example, if you look at banks this quarter, they'll probably report 0 to 2% YOY growth only. Right. So I think we will have to probably become a bit more focused on stock picking, which are the companies where earnings are more resilient. And that is where you will see probably P's holding on. Other pockets, you definitely have a risk of P derating.
Okay, all right. Got that, Ashish. Prashant, coming across to you. We have been talking about this FI selling $10-11 billion odd, but as a percentage actually of the total market capitalization, it's not that much. So maybe that's another way of looking at it. But the hope is that this outflow stops. But Prashant, since we've seen a bit of a correction from the top, I think in the past you've spoken about private sector banks as something that you like, pharma is something that you like. So if you were to pick up two big themes for this year, what would they be?
I think some of the stuff that Ashish talked about, a lot of the growth of loan growth has come down a bit. So if you see towards the end of the back half of the year, some sort of pickup in growth in banks and private sector banks. And I would say, again, you have to be very selective. There's some banks that are reporting, microfinance or other issues, and other banks not so much. So I think selectivity will be the key in terms of when it comes to asset quality and some of that loan growth coming back. I think domestic pharma continues to be okay in the near term. And I think IT services, depending on where rupee dollar ends up, and if we see some sort of discretionary demand coming back in US, IT services might do as okay as well.
Prashant, not an immediate sort of concern. Maybe it is, I don't know. So weigh in on this, and this is not a sector or a sort of question on a particular sector, but the recent events, right? I mean, you must have noticed it, and you've been following what's happening with the incoming Trump presidency pretty closely. The recent attack, for example, on H-1B from the sort of, this is Make America Great Again supporters. I mean, the right. Is that how much should we read into it? Or you think it'll be, this is all noise, and we've not seen attack on, I mean, we've seen this against, the Chinese and paranoia about, but Indians have largely been kind of immune to all of this, at least in the US. How should we read into it? And yeah, go on.
Yeah, I think the H-1B issue, I think obviously, kind of Elon Musk kind of raised it, as kind of defending it. And I think Trump himself has said in the past that, he continues to see H-1B and support H-1B from his perspective. I think obviously there are pockets that within this coalition of Republicans, there are pockets that don't want H-1B, but there are other pockets that want H-1B. I think ultimately there'll be a balance, and I think the good news from the perspective is that what has really changed in this election is, I would say, the Silicon Valley has taken over politics in a big say. In the past, it had been more muted, but now it's come out in the forefront, and both from the Republicans and the Democrat side. So I think when it comes down to rulemaking, they're going to be very pragmatic and practical. And when it comes to H-1B issue.
Okay. Finally, Ashish, just to come back to, I asked this question to your peers at Franklin Templeton yesterday. We had them on a different show. I'm going to ask you the same question now. The resilience of the domestic investor, it's been tested for the first time since COVID, right? I mean, for the last 2-3 months, and the investor has been absolutely steadfast with those investments, the SIPs. Do you see that continuing? Because it's that wall of domestic money that has prevented a broader collapse. What are the insights you're picking up when you talk to people around you, your sales teams, etc.?
Well, I think we continue to see that part of the market being very steady. So actually, if you see a full year last year, domestic mutual fund inflows have been close to about 4 lakh crores. Total domestic institutions have put in about 5 lakh crores into the market. And actually, if anything, second half has been better than the inflow that came in the first half. So I don't think there is any volatility that we have seen. Of course, on The other side, in addition to the FII selling, there has been a big wall of supply that has also come in, right? So if you look at all the IPOs, QIPs, secondary stake sales by private equity and promoters, that number also actually is about 5 lakh crores last year. So it's actually larger than the inflows into mutual funds. So I think we have seen that piece balancing out. For now, I think the domestic flows continue to be steady. But I think at the margin, it is the FI flows that is driving the market direction for the past couple of months.
Okay, all right. We leave it there. Ashish, it's a pleasure having you with us here. Thank you very much for your time. Prashant, appreciate your time here on CNBC TV18 as well. Good chat, gentlemen, and looking forward to many more in the days and weeks to come. Well, 170 points on the Nifty, so we're holding on nicely. 23,790 is where we're at. Actually, we're, if anything, on the Nifty, we're at the day's highest, not even an hour in, but for what it's worth, we are going nicely. 2,000 stocks are higher and about 350 stocks are lower at this point. MobiKwik has suddenly emerged as the biggest volume-led gainer. If you look at stocks, it was not there in the mix when we started. It's up 5% higher, 587 on MobiKwik, and that's coming through sharply. Aegis is at number 2 spot. Intellect Design is another one. It's up 9%. Again, not there in the mix, at least in the morning, but 9% pop, 981 on Intellect. So the composition of what's up on volumes has kind of changed a little bit at this point in time. And I remember on Friday I was talking about this Apollo Microsystems, which has gone berserk. Once again, in the morning it was not there. It's up 7%, 137, almost $140. So 100 to 140 very quickly in about 2 weeks or so, and it's got humongous volumes once again this morning. So that's a bit more as far as individual stocks are concerned. We'll take a quick commercial break here. We're going to come back. The management of Happy Forgings will be with us as we discuss, the outlook and, of course, what they see out there in 2025. Stay tuned.
Welcome back. The markets are in a good space, so a good time to talk about happy things. And one such company that made a big announcement yesterday was Happy Forgings. It's approved a capital investment of up to 650 crores to expand the heavyweight forged and machined components. Mr. Ashish Garg, the managing director of the company, joins us on the show. Hi, Mr. Garg. First of all, Happy New Year and wishing you all the best for 2025. Y'all have started off with a bang. Big capex is what you've announced, particularly with regard to these machine components, and it's going to be heavier as well. So give us a few details. One is, what is the typical asset turn that you will get on this investment of around 650 crores? That would be what kind of revenue potential? And I understand that this could potentially be better margin, better return ratios as well. So in comparison to what you're currently doing, how much better can it be?
Happy New Year. Thanks. Yes, we have yesterday announced the capex of 650 crores through our board, and we are very excited for this investment. The move aligns well with our strategy to grow our business in the industrial sector. So this will help us in forging and machining components from 300 kg to 3 tons. So if you look at our history, we have always grown with enhancing our capabilities in terms of weight range. So this move will definitely help us in entering into different verticals like within industrials, like power gensets, which are used primarily as a backup for data centers, and it will also help us for marine application as well as railways and defense. So the typical asset turns on this project will be in a range of 1.2x. Depending on what portion of material is sold as machined, and typically ROCEs will be better than our existing business, but the testing periods are a little longer than the current business, so it will take certain time 2 to 3 years to capitalize on the full utilization of the capacities.
Okay, so how much better can the ROCE be, if you could help us out with that? And also industrials, I think you could correct me on this number, it was around 3-4% of your total mix, which went up, I think, to around 12%. With this coming on stream, industrials as a percentage of your total mix, it goes to how much?
So industrials will, the way we see it, the industrials will look at around 25-30% going forward on full utilization basis of this capacity. We have already touched around 10-11%, and with this we expect to touch around 25-30% going forward. This will also help us in enhancing our export percentage and also accelerate our profit margins.
Exports are 20%, right, of the mix. So that moves up to what levels? So what is the desirable levels? And getting back to that point on margins and ROCE, how much better?
So in terms of, if I can say in terms of gross margin, yes, this will be around 10 to 12% better than the existing average today. And in terms of ROCEs on full utilization basis, we can also look at upwards of 25%.
Okay. Let's also talk about the funding, Mr. Garg. I think it's a mix of internal accruals and debt as well. So if you could just update us, what is the cash level at hand? How much will it be through internal accruals? And again, the debt that you already have in the balance sheet, and whether you'll be taking any additional for this.
So currently we are net cash. We have 250 crores of cash on the balance sheet. And for this investment, and we are looking at upwards of 300 crores of cash accruals going forward for next 2 to 3 years. So we won't be needing enough, debt for this. It will be majorly funded through our internal accruals. Besides this, we'll be having another capex of 350 crores on our existing line of business, which is also factored in. So in cumulatively, we are looking at over 1,000 crores of capex in next 3 years. And majority of it will be funded through our internal accruals.
Okay, let's talk about the overall outlook, because I think most on the street are expecting you to do a much better, much more solid second half. Are those expectations well placed? And also, how many years will it take for this new facility, the capex that you've just started now? When will it start contributing to the revenue? And once it's fully on stream, then how do we look at the revenue profile?
So we anticipate productions to start in Q4 of FY27 and beginning of FY28. And it will take 2 to 3 years to streamline the production on this capacity, as testing periods are long. So you can say that, within 2 to 3 years, probably we will be running up the revenues from 600 to 800 crores on the new facility.
600 to 800 crores. 800 crores would be when the new facility is on full capacity. Now, just talking about the company's current revenues, I mean, your business as it stands now. Yeah. What is the kind of improvement or recovery that you're expecting in the second half? Because the first half, the revenue growth has been a little muted, most on the street feel, as it's been, I think, in single digits.
Yes, you're right. So underlying industry is witnessing a slowdown, whether it is farm equipment or commercial vehicle sector. We have started seeing some green shoots on the farm equipment side. And it's a little early to comment on it because we have just seen December. And it was a mixed, season. So different OEMs have posted different numbers. Some has shown growth, whereas some has shown decline as well. So we need to see this quarter, particularly in terms of the deliveries they do at a retail level, to actually conclude if there are actually improvements in the market. On the CV side, the demand for multi-axle trucks is still low. And we are kind of getting a mixed feeling. We still need to see, couple of months to actually confirm that the market is doing well. But definitely market is not further slowing down, and we are at a reasonable level. When it comes to the export sector in a European market, yes, we have seen a sequential dip in last year, quarter-on-quarter degrowth in terms of farm equipment sector as well as commercial vehicle sector in European market. North American market also has seen a sharp slowdown, especially when it comes to farm equipment sector. But we that recovery, we are at a bottom right now. There is a lot of inventory action which has already happened, and we will be looking at some positive moves, but it will be too early to comment, on recovery.
Ashish, but for this year, what should we work with? Low single digit revenue growth for this year?
Yes, so we should be looking at, at a moment, we should be looking at kind of a single digit growth.
And so 4-5% growth, revenue growth for the year?
Oh, I won't be able to comment for the entire year. For H1, it was a single-digit growth because we are trying to grow despite of commodity prices slowing down. So we have to see how the commodity prices will be in H2 for us. And also at the same time, we are working on certain new projects. So H2, it was around 6 or 7% growth despite of raw material prices falling. And H2, we have to see, what is the degrowth in the commodity prices. But we are on the new projects, and company's machining business, which is a crankshaft business, has seen 15% growth, which has us in improving our gross margin by almost 300 basis points in H1, which has helped us improving our EBITDA margin by almost 1.5%. So the EBITDA growth is over 15%, and we expect this to continue going forward as well.
Okay, so better margins will hold steady. On the top line, there's a bit of uncertainty. Final question before we let you go. You won a crankshaft order in the beginning of December from one of the domestic PVs. And PVs is something where you managed to make an entry point in the last 12 to around 18 months or thereabouts. Could you tell us, is this order win from an existing customer? Is it from a new customer? I think you had added Mahindra & Mahindra, in the recent past. So is it from a new client or is it from the existing one?
It's from the new client.
Okay, could you name it?
I'm sorry, I cannot name the client because of
it's good to
agreements, but definitely it's a new client.
But good to hear it's a new client as well. That means you're making inroads into the PV segment, which was just a very, very small part of your business. Thanks a lot for joining in, Ashish. Wishing you all the best for 2025.
All right, that's happy forgings, and we'll of course track the progression there. Look at the market though. There's a very sharp cut. Almost, I think, about not 100, but 80, 90 points sell off from the day's high. And it all happened in the last 5 minutes, I think, because we looked at this as we went to Happy Forgings management for that chat. A market was cruising with about 160, 170 point gain. Just about 75 points left now. So this is happening right now. So I just, the Nifty is, it's very sharp. Look at the Nifty Bank as well, maybe. Take a look at what's happening there. Again, very, very sharp fall from 944. So this is about, 6-8 minutes old, this fall from the high. But it's come through very swiftly at this stage. Market breadth, it's kind of still holding. Some 1,800 stocks are higher, but declines have increased. Some 550, 600 stocks are now lower. So that is the overall picture at this point in time. We'll look at individual stocks, etc., on the Nifty and see what is going on. But it's time for our special quarter tech segment, where we look at earnings expectations from sort of one sector every day, with the earnings season very, very imminent now. Rima is here to tell us what is the IT sort of sector going to look like for the third quarter. Rima, over to you.
Thanks so much for that. So considering the seasonal weakness caused by furloughs in Q3, don't expect too much by way of growth. So we're looking at just about a 1% top-line growth for Infy, for TCS between 0 to 0.5%. For Wipro, it could be a negative growth. So numbers will not be much. The question is, can commentary and guidance support the outlook? There are only 3 companies where growth is expected to be robust. One of them is HCL Tech amongst the large caps at a 4% top-line growth. But that's because the products business of HCL Tech typically does well in Q3. But in the mid-cap space, it's Persistent and Coforge, where the street is anticipating roughly about a 4.5% top-line growth. And these two have been the rank outperformers in the IT services pack, with about a 70 and 50% return last year. Now moving on to the guidance. Now expect Infy to raise their revenue guidance for this year. Now the current guidance is 3.75 to 4.5%. Most believe the analysts believe that the company will tighten the guidance and maybe raise it marginally. So Kotak is at 4.5 to 4.7%. Ambit goes up to 5%. But largely, as you can see, 4.5 to 5% appears to be the guidance for Infy this year. Margin guidance of 20 to 22% should remain unchanged. For HCL Tech, too, the street believes the organic revenue guidance could get tightened. Currently, it's at 3.5%, but the lower end could be raised from 3.5% to about 4.5%, while the upper end will remain the same at 5%. The margin guidance for HCL Tech 2 is likely to remain unchanged at 18 to 19%. For Wipro, the Q4 numbers, the guidance is seen at minus 0.5 to 1.5%. So what will the street be watching out for if it's not going to be so much about the numbers? Well, discretionary spend, has that come back? Recovery in stressed sectors like telecom, manufacturing, particularly on the auto side and in areas like Europe. Pickup in hiring. Is generative AI turning out to be a growth driver? Client budgets and even deal wins, which have been muted. Now, the Nifty IT sector, the index has given a 20% plus return for 2 consecutive years. And last year, there was a 13% outperformance for Nifty IT versus the Nifty. The Nifty IT gave you a return of 22-23% last year. Stocks started rallying last year, towards the end of last year in the second half, as growth showed signs of bottoming out and management started turning constructive on sectors like BFSI. And many stocks rallied despite a cut in their EPS. For some companies like Tech Mahindra and LTIMindtree, there was a double-digit cut in their EPS estimates, but yet the stocks gave a solid return. Just to give you one example, so for instance, something like a Wipro rallied close to about 27% last year. Again, all tilted in the second half. There were EPS downgrades, but many believe that perhaps now the run-up has become excessive. CLSA downgraded the stock recently. Citi introduced a 90-day negative watch list on the stock. So now as we enter calendar year 2025 in Q3, what we need to remember is the starting point for IT is different compared to what we had last year. Stocks have outperformed and valuations are richer. Morgan Stanley says, unlike the start of 2024, where the sector positioning was light, investors are now overweight the IT sector. IT outperformance from here on would require positive revenue and earnings revision, which according to them appears to be less given the current macro environment. So they remain selective on the sector with a view to book profits if the stocks show outperformance in Q1 calendar year 25. Their order of preference is LTIMindtree, Infi, TCS within the large caps and Coforge within the mid caps. Jefferies, on the other hand, believes that improving growth outlook will support premium valuations. They do acknowledge the Nifty IT is trading at 1 standard deviation above its historical PE levels, both in absolute and relative terms, and the valuations are rich. However, an improving growth outlook for the sector, coupled with recent earnings cuts in other domestic sectors, should support the current valuations of IT. So they prefer stocks where you are seeing strong growth visibility, and their top picks include Infi, TCS, LTIMindtree amongst the large caps, Coforge, Sagility, and emphasis in the mid-cap pack. Back to you.
All right, Rima, thank you so much for that very, very helpful and very comprehensive wrap-up. It really tells us that it's not just earnings in isolation. We need to look at so much more in terms of market positioning, valuations, and perhaps the big question is whether IT stocks are already priced to perfection and whether there is no room for error. In fact, let's ask exactly this to Apurva Prasad, who looks at the IT space very, very closely and has been doing that for so many years. Of course, he's from HDFC Securities. Apurva, thanks for joining in. So I'm going to start right there. I mean, Rima's nicely reminded us that stocks kept rising even when, EPS downgrades were happening all through last year, at least last calendar year. But different factors were at play. The market was stalling. People wanted to look for safe havens, and IT provided that. What happens now? Do you think companies will be able to deliver on these expectations?
Yes, good morning. Thanks for having me first. Yes, I think to an extent, a lot of positives have got priced in. But if you look at the growth trajectory, that's certainly looking upwards. So CY25 or FY26 is expected to certainly be a better year as compared to the previous year. In fact, if you look at the profit growth last 2 years, it's a very clear acceleration that is expected there. We're sort of midway through that, even if you look at where growth stands. I think what does not change is the nature of growth is it's going to remain very divergent. So you're going to have, even for this particular quarter, the gap between the fastest growing tier 1 and the slowest is between -1 to +5% on a YOY basis. That's much larger for a mid-tier IT company. That's as wide as -1 to +20%. So it's going to remain divergent, yet on an aggregate basis, it is looking up, and we're probably halfway to normalized level of growth that is expected.
Companies like Persistent, Coforge, this is where you're expecting better growth. Apurva, good morning. But again, I mean, as Rima pointed out, it's always the case, right? A little bit of rally, valuations get very, very full and very, very rich. By the way, the listing is also there. Indofarm Equipment, stocks starting about 24% on top of the issue price, 265. So it's a very good listing coming through for Indofarm Equipment, which is coming in at this point in time. Very, very strong, large volumes as well. So primary market, I mean, it was an absolute frenzy in terms of listings and IPOs towards the end of 2025, especially the first half of December. A couple of listings every day. I remember that one day at 5 listings, and I think the pipeline remains pretty strong as well. Let's see, of course, if the secondary market supports all of this action. But Apurva, go on about that point about these companies where growth is expected to be faster than your TCS, Infosys, etc. And is it actionable in that sense, or you think valuations are full?
So valuations certainly reflecting, because you look at the divergence in valuation, that's also reflecting the growth divergence. I mean, so you are looking at the set of stocks that are expected to grow faster are trading at much higher P multiples. A good way to sort of assess them is on a PEG basis and some sort of near-term growth trajectory, which still looks fairly promising. So I think within the mid-tier, persistent systems is expected to sort of lead growth within the mid-tier. That's something which has been our preferred pick for a while now. I think that's likely to continue. Within the tier ones, again, like I was saying earlier, it's going to be fairly divergent, but HCL Tech should probably lead, for the quarter. There is, of course, some seasonality factors driving that. But the nature of growth will remain fairly divergent in the next couple of quarters. So one has to take a stock-specific.
So, Apurva, on large cap then, where do you think one can get the best combination of potential growth as well as some sort of, valuation sanity? As, Rima was pointing out, I think one of the brokers also noted the point that many stocks are trading above the 5-year valuation averages. So, large cap, what would you like? What has the best growth prospects and also some valuation comfort?
I think from a valuation standpoint and certainly from a risk-reward standpoint, I think TCS is looking attractive. I think if you get the rest of tier 1 versus TCS, I think the valuations are the closest that it's ever been. I think most of the risk seems to be priced into the numbers. So I would say there could be some upside risk if the company does back some mega deal. That's something which has been elusive for some time for the company. So I would say from the tier 1s, TCS for an absolute upside, and there is certainly valuation sanity in that respect to 5-year averages. So yeah, that's the one which we like.
Also, Apurva, a slightly broader question, not so much about Q3, but this whole, Gen AI piece. And the thing is that Indian companies, even the larger ones, they're not willing to divulge any specific numbers or give us any size, estimate of the size of work that they're perhaps looking at. While obviously they all acknowledge that they're looking at more Gen AI work and, more specific projects there. So from that perspective, which are the companies that you're watching for? Not just large caps, but maybe even some of the more niche companies. Which ones would you watch out for, say, over the next 4 quarters?
Yeah, that's interesting. So I think one way to sort of look at this is to look at the largest player globally who seems to be benefiting most currently. And they're almost 6% of their deals are Gen AI driven, 3% of their revenue is Gen AI driven, and more than half of their incremental growth is Gen AI driven. So if that's to be seen as a template, I think some of the larger IT names are perhaps at a stage where someone like an Accenture was a few quarters back. At the same time, some of the mid-tier IT companies that are in the product engineering services side, I think they do have a good chance to do well. Net beneficiary, because we have seen, I think, a lot of risk seems to be a lot lower around generative AI. We've seen very strong employee additions coming together with the fact that it's a net positive, both in terms of deals and growth. these seem to be certainly positives. And I would guess that some of the larger IT teams, as well as product development services, product engineering services companies, who have an advantage in this.
All right, Apurva, we'll leave it there. Thank you very much for joining us. And, we'll request you to have come back once we start to get some of these numbers out over the next couple of weeks or so. Kicks off, of course, with the big one, TCS, on the 9th, that is later this week. What else do we have? Markets coming off very, very sharply. So a clean 100, 110 points off the day's high on the Nifty. It'll come up on your screen. So we're left with just 40 points. Look at that. So the very strong start has been sold into, at least for now, but this is still, within the first 1 hour of trading activity. We'll take a quick commercial break here. We'll come back with, of course, Manisha. She'll put the focus again on commodities on the other side. And of course, we'll revisit some of these, big movers as far as specific stocks go. Stay tuned.
Okay, it's the same story playing out in the equity market. We are cooling off from the highs, but for the time being, yeah, there you go. That's the picture on the Nifty, just about 50 points up now. But for the time being, let's take stock of what's happening in the commodity markets as well. Manisha is joining in. Manisha, what's catching your attention at this hour?
Well, energy markets clearly, because the major moves seem to be coming in here as well for 2025 at least. Remember, the crude oil prices fell for straight 2 years in 23 and 24, but 2025 has started on a positive note. And even as we have seen prices slipping from its 3-month highs, remember, we did see prices gain up by 4.5% in the previous week. We did see 3-month highs last evening in New York session, where the crude oil prices hit $77 a barrel. But from there, we've seen a bit of a decline coming in. And the reason is the weak economic data that the streets saw yesterday coming in from US and from Germany as well. That has weighed on. And then there have been various reports putting out concerns that you could be looking at oversupply from non-OPEC countries in 2025 and demand may not catch up. And then there has been a Goldman Sachs report suggesting that the Iran oil production and exports could decline in the second quarter once Trump takes office, and there could be more sanctions on Iran. Is the reason you have 76 still holding when it comes to the Brent prices. Also supporting prices is the fact that Saudi Arabia yesterday came out with a advisory saying that they will raise prices for Asian consumers from the month of Feb. So that tells you that the demand perhaps is going to go higher as we get into the new month. The street as of now is watching out for policies from incoming Trump administration. And until then, you are looking at volatile prices. But having said that, the start to 2025 has been on the positive side. So even as you saw the Brent prices decline by 3% in 2024, they are trading 4.5% higher right now in 2025. And then it's all about natural gas prices. This clearly has been the hero in the previous year as well. We saw prices gain up by 63% in 2024 for natural gas prices. And then overnight, we've seen 10% of gains come in for prices yet again. This is because there is forecast of colder weather in the Western world. There are reports that US could see the coldest January since 2011. So the crude and the product demand is expected on the higher side. Well, there also is export demand on the stronger side. Also, when you look at the US LNG plants, they are looking at more export coming into the market, and that has been supportive for prices. All of these markets, though, will watch out for dollar index, where we've seen prices decline from 109. And then it is going to be about the US jobs report that comes in on Friday. Until then, it's going to be volatile.
All right, Manisha, thank you very much for that. Well, ONGC is what we want to focus on. We sort of highlighted this in the morning as well. Let's put the spotlight back on it. Hormuz is here. Hormuz, morning.
Morning, Prashant. And a healthy gain for ONGC that is coming in today. And that is on the back of CLSA upgrading the stock to a high conviction outperform and a 360 rupee price target, which is implying a potential upside of around 42% from yesterday's closing levels. What it says is that this Eastern offshore, which is going to ramp up to peak production, and that will lift its domestic oil and gas output by a significant 10 to 20% by the end of the year. And that is a positive trigger for ONGC. And the removal of the windfall tax will also allow the company to earn more realizations compared to around $75 a barrel in case the crude oil prices recover, which they are currently. And what CLSA is also saying is that ONGC is trading currently at a material discount not only to its own historic valuations but the historic valuations of its peers as well. And apart from that, it is also also offering a very attractive dividend yield of 6%. So this is what is driving CLSA's conviction on ONGC, and a high conviction outperform stock, expecting a 40% upside from current levels. The stock up and about today.
Okay, all right, got it. Hormuz, thanks very much for that. We need to take a quick break. On the other side, our special segment, It's the Economy. Lata will be in conversation with Suresh Ganpati of Macquarie Capital and put the spotlight on bank stocks.